Hello and welcome to KYC, a brand new show at NDTV Profit. In the fast-paced world of stock markets, investors are bombarded with information, but what they often lack is deep, comprehensive understanding of the companies that they invest in. Know Your Company is a show designed to give you regular investors powerful, actionable insights into fundamentals of a single NSE-listed company every single day. And right at the top, we start this edition of Know Your Company with AstraZeneca. Now, the reason we wanted to talk about AstraZeneca is there's not much known about this pharmaceutical space, the company, and while we have been talking about the pharma space, there is not as much information about AstraZeneca India as much as there is about several other of its peers. So I thought that would be a great way to start this show. And along with that, let's actually take a look at what the company does. Sure, if of course it is a pharmaceutical major, but it's also the Indian arm of global major AstraZeneca. Well, moving on, of course, established in India in 1979 and headquartered in Bengaluru, Karnataka. What it actually does is not only does it manufacture, but it also distributes the pharmaceutical companies which it produces. And the company has about 800 odd employees in India. And to give you an idea about the overall revenue breakup, because that would give you a clear picture about how things are panning out here. Well, a majority of its revenues come from oncology, and that's cardiovascular, that's followed, and that's roughly about 85% of its revenues is followed by diabetes and respiratory. So you can clearly see that it is cancer drugs, and to a certain extent, well, cardiovascular drugs is what's driving the company. But we do need to take a look at how things are faring as far as this financial performance is concerned. And for that, I'm going to bring in my colleague Varsha Chandani to also help us through this process. So, what we're going to do is, or rather, what we are doing is, firstly, we will talk about its various financial parameters, and we will rate this company on several of these financial parameters. Once we're done with that, we'll also give you a SWOT analysis of all kinds to give you an idea about not only strengths and weaknesses, but also opportunities and threats. That will, of course, be followed by, well, a conversation with an analyst, not only on the company, but in the sector as well. And this will, of course, be followed by a management conversation. But Varsha, welcome to the show. Thanks for joining in. Well, why don't I start off with the income statement right at the top. So, at least as far as the revenues are concerned, it's had a pretty stealthy growth. And in fact, over the last 3 odd years, it's shown you about a 17% CAGR when it comes to revenue. Again, when it comes to EBITDA, we've seen significant growth there as well. Profitability as well, looking at near 11 to 15% CAGR. And its EBITDA margin standing at around 14%. But moving on, Varsha, how are the balance sheet numbers looking here?
Well, Agam, first of all, thank you for that. So pretty good balance sheet. Pretty good balance sheet. So we are talking about almost negligible debt over here. So zero net debt company, healthy cash reserves. Yeah. So as of September 24, if you see the shareholder equity stands at around 679 crores with cash balance of 500 crores. So normally, Agam, the company which has a MNC parent, they don't like much of debt, but they want to sit on the cash reserves, which is what we are seeing in this company as well.
Right. And to talk about the return ratios as well, now Varsha's mentioned how cash reserves have panned out, and of course we've also seen the kind of EBITDA that we've seen. But let's talk about your return ratio. So when it comes to your return on equity, that stands at a healthy 24%. Now anything over the mark of 20%, well, it's considered to be a positive. It's the same for return on capital employed as well. That comes in at around 27% as well. So a reasonable positive scenario there. But what's next on our radar in terms of how the stock performance is done, Varsha?
So first, I would actually talk about the shareholding pattern that this company has, Agam. So if you see, now why I am stretching out on this metric is 75% of the shareholding is with the parent company. Now, one of the good thing about this is that investors like when the promoter has skin in the game. So 75% that we are speaking about here. And when it comes to, for FII stake, so it's all about 2%, which FII stake has, again, a pretty good number. That's not bad, followed by domestic institutional shareholders, which has almost 5% stake in the company. And if you see, Agam, the public shareholder is what? Is around 17%. So skin in the game, which investors like. And normally, Agam, again, the second point here is when you have MNC as a parent, normally they keep much of shareholding, stake towards them. So this is what we are seeing in AstraZeneca as well.
Right, and I would actually certainly give them that one bit on further notch because, because if it's a closer holding, it does mean that there's a lesser free float, and to a certain extent that keeps the all the manipulators away by that much amount. But if you consider the way things have panned out over the last 5 years, it's given you a return of around 30% CAGR in terms of price action. It's clearly beaten a lot of these broader market indices. But have the dividends been just as good, Varsha?
No, Agam, actually it's not. So if you see the dividend yield, it's been what, 0.35%. Now, this is a thumbs down in one perspective, but I need to stress upon here, because the companies which are growing at 17 to 18% CAGR, they don't normally give dividend to their shareholders. They rather want to keep themselves cash and then reinvest those money into the business. That's what AstraZeneca is actually doing, and they're going to spend almost 250 crores when it comes to expansion, when it comes to their Chennai center. So though dividend yield is not good, but we have to consider that in the last 3 years, company has been growing at 17 to 18% CAGR. Now, if company will give dividend to its shareholders, how will the company grow? But on the face, yes, the dividend yield is like not much. It's like 0.35%.
Right. And, the other thing that stands out here, Varsha, is, as I've mentioned right at the top of the show as well, the company doesn't have a lot of analyst coverage. We are looking at the wiring agencies, and we actually have very little in terms of how many analysts do in fact go ahead and cover AstraZeneca. This is despite the fact that it's shown you that kind of growth in terms of your top line, your bottom line. It's not a small company. It has a market capital around 16,000, 17,000 odd crores, and yet you don't have too much interest from the street. And one of the many reasons in this case is that if you actually go on the exchanges, you won't find any investor presentations, or you won't find much in terms of consistency in your conference calls either. So that's something to bear in mind. But overall, that is what we're seeing with respect to your financial performance. And based on that, considering the 7 parameters that we've considered for AstraZeneca, well, it scored about 5 out of 7. So certainly very good income statement, certainly very strong balance sheet, good cash reserves too. But what they are lacking in is dividend. And maybe I'll just give them a half a point and not completely take a point away, because as Varsha mentioned, that they are investing a lot in growth. But the minimal coverage on the stock could potentially be a little bit of a dampener here. With that, let's move on and talk about a handful of strengths and weaknesses. And well, that's where perhaps we can get a little bit more understanding on how the company is doing. So I'm going to start off by talking about the strengths and weaknesses. Let's start off with the strengths first up. And well, we do know that it's one of the leaders in cancer care. As I mentioned, about nearly two-thirds of its revenues coming in from oncology, and the balance coming in from, a lot of that coming in from cardiovascular. So it certainly is a big one in terms of strength. Even in terms of innovation, it does have an advantage, that the fact that its parent is an American company, because that's where it does see a lot of transfer of technology towards the Indian unit. In terms of weakness, of course, we don't have too much in terms of diversification, but this is only for the lack of too many weaknesses. Sure, it does have a lot of focus in oncology and cardiovascular drugs, but that's not a terrible weakness. But what about opportunities and threats, Varsha?
Yes, so Agam, the main opportunity for this company is, like like in start, you mentioned that 62% of the business comes from oncology.
Right.
So now we know that the GST rates have been reduced for cancer products for 4 cancer products, which actually, AstraZeneca makes or distributes from, buying it from parents. So the GST there has reduced from 12% to 5%, the one big thing that AstraZeneca has. The number 2 is, of course, the rising penetration of health insurance that we are seeing. Again, a boost to AstraZeneca. Also, government has exempted 3 cancer drugs from custom duty. Again, those 3 cancer drugs are actually, manufactured and sold by AstraZeneca India. So, and lastly, if you see the expansion of medical infrastructure that we are seeing will actually benefit all the pharmaceutical companies when it comes, including AstraZeneca. But I would also like to, point out the threat that the company might have. One is the supply chain disruptions and the rising input costs may. This is one of the threat that the company has. Then we all know the imminent threat of price reduction that all the pharmaceutical companies can see. And lastly, if you see the rising US tariffs may actually, affect sales of the company, including AstraZeneca. So yeah, these are the opportunities and threats when it comes to the business.
Some very, very crucial ones at that as well.